You ever notice how we're always hearing about the stock market's performance and all that,
Yeah.
but we don't often really stop and think about how we even form those expectations for those returns. You know what I mean?
Totally.
It's funny because you could see a 7% gain on your portfolio
Right.
and it just doesn't hit the same way it used to, you know?
Yeah, it's a really interesting thing, isn't it? It's almost like I don't know, like this creeping sense of like almost entitlement or something, I guess. Like you get used to these big returns and then
Exactly.
anything less just feels, I don't know,
Yeah.
a little bit disappointing.
It's it reminds me of that post we saw
Yeah.
where the author was practically bored
Right.
by the idea of 7 to 10% returns.
Yeah.
They were chasing,
Huge.
20, 30%.
Right.
Have you ever felt that kind of shift in your own expectations?
I think it's natural, especially when you think about like the past, I don't know, 10, 15 years, like since the 2008 crash.
Right.
The markets have been on this tear.
Totally.
The S&P 500 has averaged like 15% annually,
It's crazy.
which is insane when you put it into context with the longer term.
Yeah.
The average since the index has been around is like 7.5%.
Yeah. So it really been an exceptional period of time.
For sure.
So, I mean, with consistent 15% returns, I feel especially younger investors,
Yeah.
they just might have a warped sense of what
Sports normal.
what a normal return even looks like.
Absolutely. And I think, it's hard to understate the impact of things like interest rates being so low,
Right.
historically.
Yeah.
And also information being so readily available.
Right.
Like everybody and their brother has Robinhood on their phone.
Yeah, exactly.
You know what I mean? They're like, oh yeah, I made 30% this year.
Exactly. So it's maybe, these big gains actually are the new normal.
Yeah.
Yeah.
But then at the same time, you got to remember that markets are cyclical.
Right.
What goes up?
Must come down.
Right. Eventually. Yeah.
But it's not all about, just the long-term trends either, right?
Yeah.
The market feels way more volatile now
For sure.
than it did even in the 90s, I feel like.
Oh, yeah, for sure. Like things like the repeal of Glass-Steagall
Oh, yeah.
in the late 90s really just
Blurred
blurred the lines in the financial sector. And so,
Yeah.
it created this system that was more interconnected and complex.
Yeah.
And while that offers opportunity, it also increased systemic risk.
So it's more potential for bigger wins.
Yeah.
But also a higher chance of things going really wrong
Right.
really fast.
For sure.
It's a trade-off, I guess, but doesn't that kind of volatility make it even harder to
manage
expectations?
Absolutely. It's a total double-edged sword, right?
Yeah.
You have the potential for this rapid growth, but then the risk is so much higher.
Yeah.
I think this is where things like
Yeah.
understanding risk-adjusted returns really come in.
Oh, yeah.
Like the Sharpe A ratio
Yeah.
really helps quantify that risk.
Yeah.
It's not just about how much you could gain. It's how much risk are you taking on to
Right,
get there?
See, that's the kind of detail I think that's really helpful
For sure.
because, most investors, they know about diversification,
Yeah.
but getting into the actual weeds with tools like the Sharpe A ratio,
Absolutely.
that's where you can really start making smarter decisions.
For sure.
And I guess that's especially important in such a
In a volatile market.
Yeah.
Absolutely. Things like dollar cost averaging are great too
Right.
for smoothing out the bumps in the road.
Yeah.
But even with the best strategies,
Right.
we can't ignore the larger economic forces that are happening.
Right. Like inflation. Right.
Inflation is huge.
Yeah.
Yeah. Even if the market keeps going up,
Right.
if inflation is at 10%,
Yeah.
you're not really, gaining that much.
Your purchasing power is going down.
Exactly.
Yeah. That is a kind of a sobering thought. And then you got all the geopolitical risks and all the unknowns.
It's a little.
Feels a little overwhelming, to be honest, as investors.
It is.
Where do we even go from here?
I think a lot of it is just it's a mindset shift.
Right.
It's so easy to get caught up in chasing returns, especially after,
Right.
We've had such a good run.
Right. Exactly.
But it's so crucial to focus on the long game, define your goals.
Right.
Understand how much risk you're willing to take.
Yeah.
Don't get caught up in the comparison game on social media.
Yeah, because it's like that saying, right? Comparison is the thief of joy,
For sure.
but it's also the thief of good decision making.
Absolutely.
Yeah.
So instead of chasing the next hot stock,
Yeah.
just focus on building a portfolio
that makes it
that's diversified and like aligns with
Yeah,
your goals.
your time
The
horizon.
time horizon, yeah.
Yeah, it's about finding the right balance for you, not
Yeah.
just doing what everyone else is.
Exactly. It's not a one size fits all
Yeah, and so much of it comes back to that idea of like,
of managing expectations.
yeah,
Yeah.
because like maybe those heady days of the
Yeah.
double-digit
A
returns,
huge return.
yeah, maybe they are behind it, at least for a little bit.
It's not about settling
Yeah,
for, mediocrity, but
right.
just being realistic about what's actually achievable.
Right, and making sure your strategies
Yeah.
reflect that.
Couldn't agree more. It's like adjusting your sails
Yeah,
when the wind changes.
exactly.
We can't control the market,
Right.
but we can control how we react to it.
Yeah, that's a good point.
That's where,
Yeah, the wisdom lies.
yeah, it's a good reminder that investing is more than just,
It's more than just numbers.
numbers on a screen.
And
About understanding
Yeah,
yourself,
definitely.
and your
Yeah.
goals
Yeah.
and your relationship with risk.
Totally. That in itself,
Yeah,
the journey.
that is a journey. That's a good point.
For sure.
Well, hey, thanks for coming on and
Yeah, thanks for having me.
chatting about all this with me.
Absolutely, it was fun.
Yeah, this was fun. And to everyone listening out there, thanks for tuning in,
Take care.
and we'll catch you next time.
See ya.